welcome in our next guest for this special edition of Markets Daily 21 Shares. Head of U.S. business, Federico Brokate joins us now. Hello.
Hi, nice to be with you both.
Nice to have you here. Andy's looking for an argument, so I apologize.
Let's get into it.
All right, let's just talk about what's going on in the markets this morning. On Markets Daily, we like to talk about the markets of the day. Last I checked, Bitcoin was at around $107,000.
Yep.
Kind of remaining steady amongst all of the geopolitical tensions we've been experiencing over the past month or so. Talk to me about how you're looking at Bitcoin.
Yeah, look, to me, this is a sign of the tremendous maturity that we're seeing from Bitcoin in the market today. We've been talking about Bitcoin as this macro kind of uncorrelated asset for the last 5 years, let's call it, and it's finally kind of maturing and happening right before our very eyes. You know, typically in the past when we've looked at Bitcoin's price performance around some of these geopolitical events, the first few days, let's call it the 3 to 7 day window, tends to show a lot of downward pressure on Bitcoin prices as investors are fleeing away from risk on assets. But recently what we've seen is actually Bitcoin staying steady in that 100 to 110 range. And I think there's a few things that we can attribute to that. The first one is the institutional buyers that are coming into the market for the first time. And these are buy and hold investors that are taking up as much of the liquidity that they can from Bitcoin markets and not trading as actively around some of these events. The other thing we're seeing, is a lot of support from Washington, D.C. And even if it's regulatory support for crypto markets broadly, and it's not necessarily just specific to Bitcoin, that certainly trickles into investors' confidence in the asset, which is definitely the flagship product, if you will, from a digital asset perspective today.
I'm a little surprised. I'm going to try to get an argument started.
I support it.
But it's going to be mild. That usually, we've seen inflows now several days in a row, mostly in Bitcoin, mostly in the United States. But in that trading range, except for Sunday, has been 50 straight days of a 10% range.
Yeah.
There's not a lot of momentum to attach yourself to with Bitcoin's price. I'm a little surprised that there's that much inflows. Is it, as you say, new money coming in, or is it ARBs versus futures, or is it money to support options trading? Where do you think those ETF holders are stashing these products?
Yeah, no, it's a great question, and actually one of the questions that I love speaking about the most. If we look at Bitcoin ETF flows from the U.S. alone this year, just year-to-date numbers, we're somewhere between 12 to 13 billion in net new assets that have come into the market. If you add to what we saw in 2024. We're almost reaching $50 billion of organic flows coming into Bitcoin. And these ETFs, all they do is buy the underlying asset. So this is directly impacting the number of investors that are participating in this market today. To us, this is a sign, yes, there hasn't been maybe over the last 30 days this tremendous upswing upwards from the 100K price level. But if you zoom out, Bitcoin is still returning double-digit growth on an annual basis or on a year-to-date basis. And when you compare that to other flagship risk-on indices, whether it's the S&P 500 or a NASDAQ index, this is still far above anything we're seeing in the rest of risk assets today.
Andy, that's an interesting point you make. I mean, I'm also a little surprised, but for a different reason. A lot of the headlines are
Maybe
saying
we can start an argument.
They're saying that more and more corporate treasuries are coming to fruition. People are buying Bitcoin. Metaplanet just surpassed Tesla as the 5th largest corporate holder of Bitcoin, and yet we see the price remain.
That's right. It hasn't spurred a price. It hasn't spurred a price drive. There just hasn't been momentum to crack through that all-time high so far. I do appreciate the point, though, that even staying pat and holding that range for such a long period of time, there had to be buyers, not just sellers, right?
100%.
So every time you see a price go up from 102 to 107, something's been behind that. So we'll see how much longer this range can hold. Yeah. You have a lot of filings out there. We know you can't talk about them. The SEC is expected to respond, some of them as early as next week, right? Who will be the first owners of these new ETFs in some of the other names that you filed? This is almost a different asset class than Bitcoin, right? Where do you expect the first few major holders to be?
Yeah, it's a great question. And I think at 21 Shares, we have a little bit of hindsight benefit here based on our European business. Yep. So in Europe, we have over 45 different ETFs tracking over 25 single assets. And we've been able to see how adoption shifts from the moment the product is launched all the way to, let's call it 2-3 years down the road. Right. Typically, in our hypothesis for the U.S. market going forward will be first-time buyers or early buyers of these products will be crypto-native or crypto-adjacent individuals that have assets inside of a brokerage account, a tax-advantaged account, and they actually want to continue contributing parts of their portfolio to crypto, and ETFs happen to be a fantastic way to do that in a cost-effective and secure way. Over time, as you continue educating the market about the underlying assets and the value propositions of each project, that's when you're going to see these new joiners or these newcomers to the market, whether they're advisors, whether they're RIAs, or they're individual investors that might not be as crypto familiar as others. And that's really where having a strong story to tell together with the ETF is a really effective way to bring capital, but you do need to have that underlying narrative around what the asset is doing, what the use cases are, and what the ultimate value proposition is for a portfolio.
When do you anticipate those newcomers to come, and what's going to be the catalyzing moment that brings them in if they are still sitting on the sidelines?
Yeah, I mean, look, I'll pick Bitcoin as an example of what we've seen in the US and what's bringing in newcomers now. The first year of flows for Bitcoin was really all driven by retail investors in the US. What we've been seeing this year now, since January onwards, is really a big, massive pickup in advisors across the country that allocate assets on behalf of their end investors. And these are institutions that typically act as fiduciaries. They need to perform lengthy due diligence processes on these products. And the fact that we're seeing this uncorrelated, or let's call it less correlated returns for Bitcoin versus other risk assets is certainly that catalyst that you mentioned that is bringing more professional investors into the market today.
Market observers are going to be watching this new stampede of new products hit, presuming that we get approval from the SEC and successful launches. What should people look at? They'll be inundated with information about inflows, but should they be looking at volume? Should they be looking at impact on price? What kind of things are going to lead people to believe that certain or all of this new class of digital asset ETFs is successful right out of the gate?
Yeah, look, I think oftentimes people use flows in the ETFs as a bellwether for how successful these products are. The reality is that ETFs typically take 3 to 5 years to scale to a meaningful position. If you look back in history at the first ETFs that were ever launched, SPX, or SPY rather, was the original ETF, and that took 2 decades to take off.
Right.
Obviously, timelines are compressed now. ETFs are the investment vehicle of choice. So typically what we look at from an issuer perspective is, what are the flows, what are the volumes, what does the trading activity in these products look like? Is there a lot of client activity, or is there more buy and hold long-termism in these products? And ultimately, based on market caps for each asset, we'll judge the success based on flows.
I want to talk about this letter that you joined Van Eck and Canary Capital in sending to the SEC. It is calling for the reinstatement of first-to-file principle for ETF approvals. As we saw with the Bitcoin and ETH ETFs, a group of ETFs were approved at the same time. Talk to me about what prompted the letter and what a first-to-file principle would mean for people who are purchasing ETFs.
No, it's a great question, and it's something that we're definitely very passionate about at 21 Shares. When it comes to first-to-file principles in the ETF industry here in the US, we believe this is a large reason that we've seen so much innovation from a product perspective in the US market. Issuers that come up with new ideas, with new creative ideas, and are able to put them in clients' portfolios in a really meaningful and impactful way have been rewarded by being the first to file and being kind of having a first mover advantage, if you will. Obviously, with the Bitcoin ETFs and with the Ethereum ETFs, the SEC was challenged with a first of its kind moment, right, where all these different filers or issuers wanted to come to market with a brand new product that really hadn't been seen in the market up until that point. So I think they took a logical approach, which was to batch all of the issuers together at once. And now that we are in a more settled state, let's call it, from a market perspective, we want to see that first-to-file principle come back, because we believe it's going to spur more innovation, not just from firms like 21 Shares, but from all of the industry participants. And ultimately, the people that benefit the most are our end investors who are able to take advantage of some of that innovation.
Do you think that as the ETFs come out and you have a broader, ownership base, and you have some of the actual physical assets locked up in trust for the ETFs, that volatility would continue to come down in some of the alternative names as it has for Bitcoin?
Absolutely, absolutely. To restate some of the flow numbers that we've seen, 50 billion in flows into the ETFs alone. Those are primarily buy and hold investors.
Right.
Outside of those
almost
select hedge
5-6% of all Bitcoin is held in ETF trusteeship.
And then you add the corporate treasuries that are adding Bitcoin to their balance sheet. That's another 2-3%.
Yep.
And as that grows, and then you add governments and sovereigns on top of that, and all of these new buying bases that are actually long-term investors, we're expecting not only to pass the all-time high numbers of long-term holders of Bitcoin, but to actually reach the very top of that scale.
Federico, thanks so much for joining us here at the desk. We hope you enjoy the rest of your day.
Thank you. Thanks for having me.
Nice to see you.
You too.
That was 21 Shares Head of U.S. Business, Federico Brokate.